All right, guys, it's Paul Singh, the market speculator, with the weekly swing trade report from bullsonwallstreet.com. Today, as usual, we will go over the indexes, talk about the reopen industries and their ETFs. And when I say reopen, that's essentially travel-related areas. We'll talk about FAANG and big tech. Most of these guys have had earnings now, and there have been some interesting earnings reactions. And then we'll take a look at 5 stocks that we're paying very close attention to going into the week. And that is the first week of August. In the swing report tomorrow for swing members, we will talk about August seasonality and how that will impact our trading. All right, let's look at SPY here. Now, the good is we are near all-time highs. The bad is, while 0.5% doesn't seem like that big of a pullback, underneath the hood, a little bit more concerning. Of course, we always look at the equal weighted ETF. We know that had been lagging a little bit, not quite at the same highs. But what is interesting is, more recently here, this consolidation and pullback has actually held up a little better than SPY. So kind of hard to read that. So we're not going to give it any kind of edge one way or the other. And if we look at the Qs pulling back here, barely holding the 9 EMA. QQEW, very strong. So here we actually have somewhat of a strong signal here within tech, and QQEW is the equal weighted ETF. Just a quick recap for those who don't know. The Qs, SPY, they are not equally weighted. Different stocks are weighted differently. Apple is worth about 3% of SPY. The equal weighteds, they take each stock and make them 0.2%. Now, IWM here lagging quite a bit, and that's no surprise when we talk about the reopen stocks, which would be more impactful to the Russell than, say, SPY or the Qs. So essentially here, no big edge in the market. I think it's a good time for caution, especially when we think of August seasonality. That doesn't mean we can't trade. There are some good spots here and there to take positions, but I wouldn't be overly aggressive. Now let's look at some of the reopen ETFs. Here's a list of reopen stocks that we watch. And here is an ETF list that we pay close attention to. I'm going to pull up some of the reopen related ETFs. So Jets is one of them, of course. Airlines, very tied to the reopening of the economy. You can see here it had this huge meltdown last year when the whole pandemic thing started. Never violated the low from March, and since then has basically been in a bottom and continuation pattern. But recently we saw something significant. That is the continuation pattern from the bottom formation failing. And what we were very interested in is, could we remount these moving averages? If that happened, we'd be right back on trend. The Delta variant, the fears of the coronavirus, all that kind of stuff has had an impact, even though travel has still been very strong. But technical pattern is there for a dead cat bounce. This even sets up potential shorts here and maybe more of a pullback down here. Very sensitive to what's going on right now. News can change daily, but the pattern is there for a potential short setup there in Jets. BJK, and of course, you can do the ETF, or you could trade one of the many stocks that make up the ETF, or just an airline in general, and look for the same patterns. BJK, resorts, gaming, and casinos. Similar pattern here, failing at the 200-day moving average. If we pull this thing back, gaming had actually been much stronger than airlines, had actually gotten way above the pre-pandemic levels, but we are seeing a potential topping pattern, and we are seeing some negative volume in here as well. So concerning below the 200-day moving average, the remount failed, which is the most concerning here. Now, PEJ, this would be restaurants, entertainment, and leisure, also was very strong, had gotten back up above the pre-pandemic levels. Here, whereas BJK and Airlines, very concerning and could even be considered potential short setups. PEJ seems more like a natural pullback, not really a short setup. Kind of wait and see if it starts to improve here. Maybe can go long again. There were a few restaurants like Cake that had some concerning earnings reactions, and you can see how weak Cheesecake Factory has been. All right, so those are some of the travel-related industries, and of course you can go in and look at some of the stocks there. Now let's get to big tech. All of these guys, most of these guys have had earnings. We'll go over the FAANG stocks, and we'll take a look at Tesla as well. Let's start with Tesla. Tesla looks really good here. Didn't have much of an earnings reaction, actually pulled back a little bit, even though it had blowout numbers and very good guidance. And when I see that the numbers and guidance are very good, but there's not much of a reaction, then we start to see some improvement. That's usually a really strong signal. So I like Tesla here, bouncing off the moving averages. Maybe it's going to test the April range. It's at 687 right now. The top of that range would be 767, almost 100 points there. And then, of course, potentially testing the all-time high here at 891. So it does look like a potential continuation pattern after this long consolidation. And then again, we know the earnings numbers were pretty good. Let's go to Google. One of the FAANG stocks here had blowout earnings, but the reaction hasn't really been there. It did gap up a little bit. And this is always a concern when a stock is extended going into earnings, has really good numbers and gaps up. It's often hard to sustain itself because a lot of it has been priced in. You saw that here back in April where it was extended, had the nice gap up and pulled back. Here, it didn't really follow through. It did consolidate, didn't really break down. But I would hold off and wait for a good pullback, entry on Google. Netflix has been really weak here. Had a lot of competition, some concerns here. And you can see hasn't really done nothing. We're pretty much ignoring that one right now. Apple had very strong earnings, had some concerns in terms of access to chips. That is obviously a short-term type thing, but revenues and sales have been fantastic. Because of the concerns over chips, you can see here that we had a little bit of a gap down, but I'll be watching very closely for a remount of the 9 EMA. If that happens, or we get a break of a high and it has consolidated for a while, which is good. It's not overly extended. Really interested in Apple. And now let's talk about Facebook and Amazon. Facebook, very similar to Google in that it was already extended going into a very strong earnings. And you can see it has pulled back since. I'd love to see it test the 50-day moving average and potentially get an entry here at a better price. Now, Amazon here. This is the big one. You know, we had a year-long consolidation. And then before earnings, we had a break of that range. And historically, with a lot of the big tech stocks, and with Amazon specifically as well, when the stock, if you go back, years, go back to 2000, all the way back to the early 2000s, when this thing consolidates for a long time and then breaks that range, it often sets up the next big run in the stock. And it was looking like that. But then we had this poor earnings reaction that put it right back in the range. So really nothing to do with Amazon right now. If there was anything, maybe a bottom of the range play. And there's really two kind of bottom of the ranges. One would be right here recently, which is about to test the 200-day moving average. Maybe if it bounces in there and pulls into the gap, or tests the actual bottom of the range, which is down here around 3,000. So other than that, nothing to really do with a stock that was really interesting going into earnings if it could have held this range, which it did not do. All right, so that's FAANG stocks. Let's now go ahead and look at 5 stocks that I'm really interested in. Another big tech in AMD. Now this one had the long range like Amazon, but unlike Amazon, had a really good earnings reaction going into earnings. This, again, often sets up in these big tech stocks the next big run in the stock, and a little extended right now. So this was the earnings candle here on 728, continuation on 729, where it broke the year-long range, and then a little bit of continuation on Friday. Decent spot here for an entry. I'd use a very loose stop. Industrial metals like steel. So here's US Steel. Very strong recently with all the infrastructure bill talk And you can see here remounting the 50-day moving average after being a little weak. Very interested in X and a bunch of other steel and copper stocks as well. We have Zoom, which is a direct play in all the new Delta and coronavirus talk. And you can see here, since that has happened, it has improved quite a bit after looking like it was topping. So potentially a play there if all this stuff continues to be in the news. Finally, one more related corona play. mRNA has been on fire, maybe a little extended here, so I'd be careful. If it were to break down below the 90 MA, maybe there's even potential for a quick short setup. And definitely if it did pull back, I would watch for a potential entry if it was still in the news, if there was a lot going on in the news right around the gap level, which is around 260. And by that time, the 50-day moving average would probably be creeping up around that range as well. All right, guys, that's it for today. Weekly swing report. We'll probably be doing another coffee with Paul, coffee and stocks with Paul pretty soon. And then, of course, more weekly swings. And if you want to become a member, go ahead and go to Bulls on Wall Street and look at the swing trading and part-time trading.